What's up, everybody? It's the Digital World Podcast. And what you're seeing here, well, before I get there, let's go back here to the 30-year Treasury bond. We finally got some updates on the data, and it's showing that as of yesterday, the 30-year is now, I guess you guys can't see it. It's now to 4.64%, right? It's clearly, you know, in that here, let's see if I can push it up right there. There it is. Okay, it's clearly just tightening, and I think with the events that are transpiring, you can see that metals, right, are warning about what's coming. There's definitely something on the horizon, and you don't see metals run like this unless there's something ominous coming, right? What that is will be revealed, and will be seen later. But you're starting to see the cracks in the system start to show. Right now, you're seeing the banking sector, regional banks, have extreme red days, and so what you're gonna see is a Fed. I mean, if you look at the 2008 Great Financial Playbook, right, you're going to start to see the Fed use their monetary policy, right, um, to cut rates, but there's going to be a lot of massive drawdowns that people do not anticipate, that are not paying attention, right, and so right now Warren Buffett is sitting on piles of cash, right, more than $300 billion. He knows what's coming, and he's preparing to unload his cash pile onto assets that he'll buy pennies on the dollar. Now, um, things that you need to be aware of, right, is that we're having this, we're in a very interesting scenario in which there are macro forces, right, headwinds um, everywhere, and some people, some nations are trying to uh, get a hold of dollars in order to pay their debts due in dollars. So there's going to be a liquidity crunch. You can feel the credit market tightening. Is it over yet? Uh, Not yet. But I think there are forces right now that are barely holding on by a thread, um, to see, where this goes. Currently, where gold stands, I think is pretty interesting. If this is it's been climbing pretty aggressively the last couple weeks, and we've seen that final aggressive push in the last couple days. It seems like where it's just like going from 3,900 to 4,300 plus. Um, and so it feels like right now we're starting to form a top here in gold. I think here in the short term, when I look at the chart of gold, and how it behaved in its last run up in 2007 to 2008, we had the initial run up, and then it collapsed. Well, it didn't collapse. It had a correction along with equities. And once the equity correction ended, it resumed its march up. And so I think right now with gold, this is the initial run up. It will probably come down with equities, um, and then you'll see it take off again. So just comparing, right, some similarities from the past cycle to current state. Now, for the part we're all here for, house prices. I want you. Darth Powell posted this interesting article here talking about uh, how very few people realize the housing bubble has burst, right? Um, he brings up a previous tweet where it says, the reason volume leads price is because price is synonymous with inflation, which is a lagging indicator. Price, therefore, lags employment. So we have volume first, then employment, and then price. Prices remain stable because employment hasn't declined. That remains in front of us. So we've had the drop in volume. Uh, the employment is you see it rising. Once employment completely collapses, then you're going to see price come down. And you're seeing that, right? And so, but how does this happen, right? A typical housing bubble does not pop. Rather, prices decline slowly in real terms over several years, which we've seen the last couple of years, right? I'd say 1 or 2 years. This is, well, technically the top, depending on the region you're in, but for the most part, the top was around 2022, 2023. So we've had several years of like sticky prices coming down. It says, this is because housing prices display strong persistence and are sticky downward. Sellers tend to want a price close to recent sales in their neighborhood, and buyers, sensing prices are declining, will wait for even lower prices. This means real estate markets do not clear immediately, and what we initially observe is a drop in transaction volumes, followed sometime later by price declines. Anyways, the point being is that I know several people, right, that were anxious to buy a home in the last couple years and up to recent day. And they got into these homes. Now, these homes are not worth what they paid for, right? Way overpriced. And as prices come down, right, their home payment does not. If anything, their home payment increases due to increasing property taxes. And so, if they were already in a bind to buy a home, and they could just make that payment, they are not putting themselves in a good position, because as property rates increase, now their payment increases. And how do they come up with that extra money, right? And so that is the problem we're facing, is that a lot of people are putting themselves in these precarious situations and and are not aware of where we are in the cycle. And so again, you'll hear the saying, oh, the best time to plant a tree was yesterday. Yeah, true. But there's also seasonal times that are best to plant a tree. Would you plant a tree in the middle of winter? Probably not, right? You're not setting it up for success. It could kill the tree, all right? But if you plant it in early spring, you have better, success with it, with the roots, getting ground, it being nurtured, etc. So I completely disagree with the, well, you should have done it yesterday. Well, it's like, well, there's seasonal cycles to this thing. You're not gonna time the perfect bottom or the top, and you gotta realize that when you're buying a house, can you afford the house? And there's a big difference between being able to afford the house and being able to make the payment. There's a big difference, right? And so I think that's what people have to, price in. But I for folks who made the decision to buy a property, and just because they can afford it does not mean, just because they can make payment does not mean they can afford it. And when you sense the macro headwinds coming, and realize that there's something coming in the near future economically, you really start to wonder, like, hey, how are these people going to do it, right? How are you going to do it? So, with that being said, let me know what your guys' thoughts are. There's a realistic possibility that there's one last little push in the markets before everything gives way. And so you got to be vigilant, be watchful. And I'm curious if any of you have any stories that you can comment below of similar things you guys are experiencing. All right, thank you for watching. Like and subscribe to the channel. It's the Digital World Podcast, and I'll see you in the next episode. Have a good one.